the opportunities and the challenges of investing in India. So please take your seat quickly and join me in welcoming Managing Director and Head, Carlyle India Advisors, Mr. Amit Jain.
Thank you. Is this on?
Yes, it is.
Okay. Thank you, Mint, for this opportunity and platform. I must say it's a very tough act to follow. Such eminent speakers, so I'll try to do my best and also be efficient on time. You know, when Mint called me to speak about this topic around why India is attractive, the rise of Indian Spring, what to invest in, and I started penning down my thoughts for this precious 12, 13 minutes I've got with you. And I started writing why India is credible. And I said, you know, India has got young populations, 2/3 of our population is less than 35 years of age. Our judiciary works, we have a strong democracy, we are an English-speaking country, increasingly women are joining workforce, so on and so forth. And I just put my pen down, and a second thought occurred, which is to say that a lot of it, if not all of it, is actually true for decades following 1947. So why is that we haven't been the center stage in multiple decades following 1947, and why is that Mint chose this topic, you know, very much this year? Why is that the 70s and the 80s and the 90s, we never asked this question, that this is the decade of India? And as I thought more about it, to me the answer kind of lies in a concept of physics, which I studied long back for sciences students. And the concept is called escape velocity. Objects move around an orbit, around a circle, with a particular energy and momentum. And it requires a different energy, different velocity, which pushes the momentum such that they change the orbit they kind of play in. And ladies and gentlemen, today I'm going to assert that India is starting to hit and gain its escape velocity basis the work done in the last 10 years. And I think that prepares the foundation for why the next 10 years could belong to India. Now let's double click a little bit on what are the elements of escape velocities. There are quite a few, and I think finance ministers spoke about it. To me, 3 stands out. Number 1 is just the sheer consistency and the predictability with which this government has operated and our Honorable Prime Minister has executed on his vision from 2014. Now, why is consistency and predictability important? Because to play in any game, you need to know the rules of the game. The rules of the game have to be clear, and that's when the players feel equitable. That's when they feel inclusive. That's when anxieties are low and the confidence is high. And I think that's what has happened in an environment in the last 10 years where whether it's investors like us, whether it's business builders, entrepreneurs, they always thought that they were fair shot and the same rules of game will apply to everybody. Number 2 is infrastructure. I think infrastructure is not just physical, but also digital. India today has the 2nd largest road network, the 3rd largest traffic on airlines, and the 4th largest rail network. This has never happened in many years post our independence. Now, this not only just improves the quality of our lives, but fundamentally increases the cost competitiveness, because businesses have to operate in a cost competitive environment, not just in India, but globally. And businesses require a certain ecosystem to operate in to lower their cost of operations. Now, when you overlay many years where the infrastructure was weak, inflation was high, and therefore our cost of capital was high, a lot of our businesses weren't competitive when it comes to fight on the global landscape. You reverse this now. Inflation is contained, and we've got an infrastructure to support, and therefore this long-standing dream of India, where India wants to be the factory to the world, I think if India has ever a fair shot to do this, I think it's in the next decade. You switch it to digital. 800 million people are away, one WhatsApp message away. Now, when you have a digital infrastructure built like this, and Gaurav can speak to it, who's sitting in the audience here, businesses today with very marginal investments on technology infrastructure can build phenomenal businesses leading to consumer tech, digital tech, fintech businesses serving the Indian diaspora. And that could have been possible in few years back. The third element is access to capital. You know, India have had many people. You know, one of the things we definitely have is talent, both in quality and quantity. What that talent never had is the access to risk capital. That risk capital was concentrated in few business houses, and foreign capital wasn't available. In the last decade, India has really created an atmosphere where both the domestic and the foreign capital is now available in plenty, as and when needed, should you have a credible idea. We get $2 billion of SIP money into retail markets. We have private equity investing $50 to $60 billion each year. Now you put it all together. You have a predictable and consistent playground to play. You have an infrastructure which will bring your cost of operations down. And you have talent, which is available with risk capital, which never happened. I think all of this put together gives me the confidence that we may be at the point of hitting the escape velocity I just referred to. So I think we do sit, in my view, on a foundation of last 10 years of hard work to kind of capitalize on the next 10. Let me also spend a minute on why India is not just attractive, but very unique. And I spoke about the macro, but macro sometimes is not the sufficient condition. It is necessary, but mathematically not sufficient. And what makes investing in India very unique today, again, three things. Number one is talent. I think we have exceptional talent, and I don't need to kind of vouch for it because we've already seen multiple MNCs, from technology to coffee chains to investment banks to consulting firms run by Indians. And I think there's a reputable model there, not just because of the quality of institutions we have built, but the way just we are brought up in Indian middle class, right? We are trained on a daily basis since we are born to do more with less. We learn frugality and innovation in our households. We compete. We compete not with others, we actually compete with ourselves to become the better version of ourselves for tomorrow, right? We thrive in complexity, right? There's a fair degree of IQ required sometimes to cross an Indian road, which doesn't have traffic signal. And we value diversity because we grew up in that as our day-to-day. Now you think about a CEO or a management team who knows how to do more with less, who thrives in complexity in this VUCA world we spoke about, who values diversity, and has the ability to compete and become a better version of itself. Now, when you're investing in India, you're investing in this talent, and I think this talent truly is well placed to make the best and the greatest businesses of tomorrow. The second is business model. India is a tough market. We have our per capita somewhere around $2,500 per person, but our aspirations are no different than some of the developed economies, especially after the advent of social media. Now, when an Indian company or a company based out of India want to serve these consumers who have the aspirations as good as developed markets, but still does not have the paying capacity, it requires fundamental innovations on go-to-market, the complexity to operate in. And therefore, I always say, you solve for India, you win in the world. If you can solve for the use cases of India, you're highly likely that there is no use case out in the world which you want to solve for. And sitting and investing in India into these companies, investors like us get an opportunity to actually play that global platform. And finally, I would say technology. As investors, we want to have investments which have lower downside. Now, one of the downsides is, should the business model be completely disrupted by technology? Now, Indian businesses, partly by the vintage in which these businesses are being built, and partly in the mindset Indians embrace technology, technology has actually become the enabler, not a disruptor. So when you again put it all together, you got the best talent to invest capital behind, you got business models which can solve not just Indian problems, but the problems of the world, and you have very limited risk of disruption because technology at the core of how businesses are built. Where else would you find an investment which is more appealing than a combination of these three? And therefore, when we think about investing in India at Carlyle, we think about it in two of these mega themes. Businesses which are India for India, and businesses which are India for world. India for India, as we spoke about, businesses which will work and create value around the rising middle class, healthcare, financial services, consumer, and India for world, where there are a lot of Indian companies which are starting to build global competitive advantage. Pharmaceutical, the finance minister spoke about APIs, IT services, and we'll increasingly see in manufacturing and industrials where auto components, packaging, specialty chemicals, India will truly come out to become the factory of the world. So I think between India for India, India for the world, it's a very unique destination and provides for tons of opportunities. Having said all of this, I must say we have to be thoughtful. It's a very long journey. As we spoke a lot about 2014 roadmap, it's a very long journey where we need to put our head down. I think the way we have grown up, we tend to be very emotional. We go very high, and sometimes we can dejected with few hiccups. And I think what is required today is a mindset of equanimity where we can put our head down and really take one day at a time and let the execution not come, or the quality of execution not come in the way of what seems, really possible. I would also say that in the space we are in, there will be complexity. And that complexity would not be probably domestic, but will come out of geopolitics. Today, it seems like we're very favorably placed, and it may not be the case tomorrow. And I think one has to be just ready to ride through that wave as we speak. Finally, I'll close by saying it's been a true privilege to be on this jury with Gaurav and others. And what we have valued as we find our winners today, and we'll share about it, is that spirit of working around complexity with creativity. I was grown in the childhood where a lot of times the world around me told me, chalta hai. Amit, this is how the world works, and this is how India particularly works. And I think from there, this generation, I see people saying, chalte hain, let's make it happen. And I think we're trying to reward today entrepreneurs, businesses, investors who have had this attitude of making things happen. With that note, thank you and good luck. Happy to take it.
Mr. Jain, thank you so much. Please stay with me on stage, sir. Stay with me. Would you like to have a quick sip of water? Yes? All right, here you go. Ravi, I'm going to request you to please join me on stage to present a token of our gratitude to Mr. Amit Jain. Center stage, gentlemen, so that we can capture this shot. Can we have a huge round of applause for Mr. Amit Jain? On stage.